Hello, friends. Welcome to you, all the members of the Institute who have joined this webinar. A great welcome to you once again. As you all know, this is the program organized by Direct Tax Committee of the Institute of Chartered Accountants of India. It's a deep dive on the Income Tax Finance Bill 2025, and also we had selected a curtain raiser on the new income tax bill. It was expected that this income tax bill would be laid down before the parliament today, but we have been informed right now that it is before the cabinet for the approval, and on Monday it would be laid down. But I will take you through what has gone through, what our direct tax committee had contributed towards it, what is expected in this income tax bill. Basically, what was the objective of this income tax bill, which is going to be placed before the Lok Sabha maybe next week. So, of course, before I go to that, as you all know, this may be probably the last program of this direct tax committee for this particular council year. As you all know, on 12th of Feb 2025, new council will take over. The new committees will be formed. You will find new chairman coming in, or maybe I don't know whether I continue or not, or the vice chairman. But it has been a very successful year, 1 year. I had gained a great experience. I would thank my president, C. A. Ranjit Agarwal ji, vice president Charanjit Singh Nanda for giving me this opportunity in my first term of the Central Council, making me chairman of this most important committee, which I always feel, Direct Tax Committee. Most of our professionals are even today traditionally practicing in this area, and therefore it always remains a core area. I would like to thank my vice chairman Kota Srinivas, who had been always with me for this particular year, who supported me in all our agenda items, endeavors, whatever we want to do. I would like to make specific mention of certain Central Council members who had always contributed to the Direct Tax Committee's initiatives. Chandrakant C.V. Chitleji, who is also one of the panelists today, Sanjay Kumar Agarwal ji, Pramod Jain ji, who is also again a panelist. I think so he will be joining in the room maybe in the next 5 to 10 minutes, and many other co-opted members, special invitees. Apart from this, today we have a panelist, Mr. Satish Gupta ji, who is a Central Council member elect, who will be joining the council on 12th of Feb. He was also a Central Council member before also. We have a Pankaj Shah who will be joining in some time. He is a Central Council member elect. He would be also joining Central Council from 12th of February. He is from Indore. Satish Gupta is from Jaipur. He was also a president of Rajasthan Tax Bar Association, and both of them are experts in the taxation. Of course, I need not say much about the other panelists, Pramod Jain and C.V. Chitleji. You all know they have been part of this Direct Tax Committee. They were also, Chitleji himself was the past chairman of the Direct Tax Committee, and under his leadership, in fact, the guidance note on tax audit was revised after a gap of almost 8 to 9 years, which was done in 2022. That is, last it was done in 2014. And taking that forward, when I was a vice chairman and chairman, we have tried to revise that. This year, we have also tried to bring an implementation guide on 43B, which I believe in the years to come that would be converted into a guidance note, or that part may become part of the guidance note on tax audit. We also did brought guidance note on the 10B and 10BB. Last year it was an implementation guide. This year we have converted that into the guidance note. Apart from that, being this been the two budget year, we had submitted a pre-budget 2024 and again a post-budget. We had also submitted pre-budget 2025, and I'm happy to note that certain suggestions which were made through our pre-budget 2025, they have been accepted also. 5 or 6, if I can say, that was rationalization of TDS provisions, removal of TCS provisions to certain extent, exemption of NSS, and many more of such. But I am happy that when CBDT do considers our representations. In fact, for the purpose of this new income tax bill, which I said I would be touching up, there was an exercise undertaken under the leadership of the committee headed by the Secretary Ministry of Revenue, that is Mr. Sanjay Malhotra, who was the RBI governor at that, now he is the RBI governor, and myself, Chitle sir was there, my vice chairman Kotaji was there, and that time he said the idea of this income tax act, new income tax act, is to come out with the simplification of income tax law. How the English can be made more simpler, wherein there is no issue of the interpretation issues are less. And the second objective of this new act was to suggest for bringing in steps or bringing in amendments which ensures that the litigations comes down. It reduces the compliance burden. So this or two or three important objectives were given. Based on that, we had we had reached membership at the large. We received more than 350 suggestions in this regard from the membership across. We have compiled that and we submitted 127-page document to the CBDT on comprehensive review of the Income Tax Act. So I believe when the income tax bill comes, maybe the next week, I'm sure a lot of suggestions which were made through this comprehensive review of Income Tax Act would have been considered, and we'll try to make a comparison, see to it. And after that also, obviously, that will be open for the public comments. It may go to the standing committees or a JPC. I don't know how much long will it take, but I'm sure at least for the financial year 25-26 relevant to assessment year 26-27, Income Tax Act 1961 will be still applicable, which has been amended by this Finance Act 2025, and we would be also suggesting such a giving our post-budget suggestions to that. For that purpose also, we have reached the membership at large. If you have any suggestions on this Finance Act 2025, very specifically I am saying on this Finance Act 2025, please do send us. We'll try to compile that and submit it to the CBTT. Apart from that, this year, because the comprehensive review of Income Tax Act was happening, Niti Aayog had made one committee for purpose of tax reforms. And apart from the revenue officers, Institute was the only person who was representing on that committee. Again, being a chair of Direct Tax Committee, I got that opportunity, and we had given 7 to 8 important suggestions that committee had given, stated basically from an idea of simplification. So this Income Tax Act, what I look at it as, would be not from a perspective of a re-looking at the rates of the income tax or re-looking at the provisions, but the idea is to bring down the Income Tax Act. Somebody told me, I was listening to Girish Ahuja Sahab next last week when I was moderating a session, that there are in effect 570 sections. It may look as if 90, but there are a lot of one like 115 A, B, AD or something like that. So the idea of this act would be what I perceive or what I feel should be that to reduce these volumes, reduce these sections, bring down the provisions and exemptions, remove all the obsolete chapters, which was our suggestions which have gone through comprehensive review also, and I believe that would be considered. When that comes up, I am sure we will be discussing this also. Meanwhile, we have now been joined in our room by CA Pramod Jain, again, who is a direct tax expert. I know many of people who are hearing us today keep on writing to him. I see him busy with a lot of telephone calls, always addressing the issues of members of the income tax. So thank you very much, Pramodji. Again, thank you, Chitles and Gupta ji, who has already joined. So taking it that forward, of course, this year has been wonderful. Whatever I had envisaged, we could have completed. Only one issue which is pending, I'm sure the next Direct Tax Committee would be taking, which I had discussed in the webinars. That's why I'm touching it here, though it may not be relevant when we are speaking on the budget, was on, but it is important for membership, is on reviewing of tax audit limit, which was directed by Supreme Court. Direct Tax Committee had already taken a decision. The matter is pending before the council. Council term is getting over on 12th of Feb, so I believe this council will not be able to take, but I'm sure the new council will be taking up. And whatever decision has been taken by the council, definitely the whosoever takes up as the chairman of this Direct Tax Committee will brief the membership at the large. So I thought I'll just take this last opportunity to address you as the chairman of this August committee of our Institute of Chartered Accountants of India. So now, because all the panelists are here, we need to discuss upon the provisions. We need to do a deep dive. I know because we are already 6 days, you would have already went into it. You yourself would have looked into the budget, but there are certain intricacies always involved. There are certain confusions which people need clarity about. I'm sure the panelists which we have today in the room and who is also online, they will be able to clear your doubts. We have also received certain questions from you. During this 2 hours, what I will try to do is I'll try to take topic wise amendments which have come in, and I'll put that questions before the panelists. Three of them are available. Pankaj Shah, as I mentioned, he would be joining in some time. When he comes, then I will also try to put some questions to him, and we'll try to take a response from that panelist. If somebody wants to, other panelist also wants to respond or wants to add something on that, they are open to do that. So, with this request, once again, a very good afternoon to all of you. Thank you very much for joining. And I'll just start with the pre budget. As we know, when I was looking at this finance bill 2025, I think so it's the least number of amendments which have taken place this year. But obviously, one of the most important bin, lot of the people are discussing that this is one of the best budget when it comes to giving relief to the small taxpayers. So to understand that further, I will just first like to have the views of our panelist from Jaipur who is online, Satish Gupta ji. Satish Gupta ji, thank you very much for joining us. I would request you to kindly throw us light on amendments which has been proposed in this finance bill in respect of personal taxation. Over to you, Satish ji.
Thank you, Chairman. Chairman Piyush Hajed ji, Vice Chairman Kota Srinivas ji, the panelists, my co-panelists Sanjay Agarwal ji, my brother Chitle sir, Pramod ji, Pankaj Shah ji, and my dear friends who are attending this webinar. At the very outset, I am really thankful to Chairman and the committee for giving me this opportunity to be a part of this very prestigious webinar, Deep Dive on Union Budget. And the most important thing that the most important topic which has been given to me, the question has been given to me, is the talk of the country, and it is spreading amongst all the small, I cannot small and medium taxpayers. Friends, before I come on that particular point of the tax rates, I would like to talk about some things about this the uniqueness of this particular provision. Friends, see that what is the per capita income of our country, and according to the IMF data, it is around 2,940 US dollar, and the exemption limit under Section 87A is 12 lakhs, which is 4 times of per capita income. And friends, believe me, this is the only country where the tax exemption limit for the individuals is 4 times of the per capita income. And see the friend that as a 2.5 crore taxpayers I'm talking about. And after this exemption, we will lose the 1 crore taxpayers. So it will be around 1% of the total population of country. So these are something which are very interesting. And if you see the salaried persons, so I think 9 out of 10 will go out of this tax regime. So with these figures, friends, I would like to just refer the budget speech of Honorable Finance Minister Nirmala Sitharaman ji. In the very first para of her budget speech, she has specifically told that this budget continues our government's efforts to enhance spending power of India's rising middle class. So we can understand that the provision which has come of this particular relief is just to give spending power to India's middle class. And thrust areas also, she has spoken that taxation will be her thrust area, particularly this year. So we can expect several things in the coming new bill, which we are waiting eagerly. We were supposed to get it today, but could not get. Now we will get it on Monday, I think. And Chairman, who told that it is perhaps last program, I think he may have to organize one more program on that particular bill, and that will be very interesting. So friends, I am coming on the provision 115 BSc subsection 1A clause 3rd. Clause 3rd has been inserted this year after clause 2nd. Clause 3rd speaks of the tax rate for a 2627. Before I come on the rates, friend, you all know this is new tax regime. All these rates are applicable on the new tax regime only. There is no change in the tax rates of the old regime taxpayers. The first thing which I want to speak is these changes are applicable only on the new tax regime taxpayers. New tax regime came through Finance Act 2020 and were applicable first year in 21-22. Thereafter, several changes it has seen. Last year also several changes there in the rates. But this year, last year, one change was also important, which I would like to, just for your memory, that now the new tax regime is the default regime, meaning thereby that if you don't get option to change that particular regime, so it will be a default regime. If you want to change the regime because you have invested several things, you have taken loan on house, so you will have to apply 10 IEA, and that too there are some restrictions for the business people, but for others non-business people, you can change just before the filing of return of income. And now, friend, that there is a drastic change in the rates. Drastic meaning thereby, if there is an income of 25 lakhs, there is a benefit of rupees 1 lakh 10,000. This is without the surcharge and the HEC, etc. So, see, friend, now to remember the rate changes to the slabs, we will have to multiply. We will have to learn again the table of 4, 4, 8, 12, 16, 20, 24. So, if we learn the table of 4 again, then we will know the slabs. So 0 to 4, nil tax, 4 to 8, 5. And for the tax rates, we will have to again remember that table of 5. So for 0 to 4, it is nil, 4 to 8, it is 5, 8 to 12, it is 10, 12 to 16, it is 15, 16 to 20, it is 20, 20 to 24, it is 25, and thereafter 30. So it is very simple formula for friends. Table of 4 for the slabs and table of 5 for the rates. So if we calculate the tax relief on the income of rupees 25 lakhs, it comes to rupees 1 lakh 10,000. That is the biggest relief ever given by any government in our country. So it is spreading the happiness. So every person is thinking that what a fabulous budget has come this time. And definitely, what were the intentions of our finance minister, that is extending the spending money, that will definitely be done. Next, friends, I would like to tell you that surcharge and health education says all are there as per their applicability. And I have spoken that if you want to go the old regime, you will have to apply for that, and that option should be exercised within the time limit, that is before filing the return of income. And for others, I mean to say that for others who have not opted for the new tax regime, or there is no change in the tax rate, all the other rates will be there, which were in the last year. So this is about the personal taxation. If you allow me, so I can take 87 because it is co-linked. And if you say it should be taken later, I will take it later.
So please go ahead, Satish. It's
Thank
linked to
you.
this.
Ma'am. So friends, since section 87 is directly connected with this particular provision, I requested the chairman that I should take this one also. So, friend, this is again a very big relief. But I would alert you, friends, whoever is listening me, that section 87A relief is only for resident individuals. It is not available. Tax rates of X 115 BAC is available for individual, HUF, AOP, artificial jurisdiction person, BOI. But this relief of 87 is available only to individual, and that to resident individual. Non-resident individual is not entitled for relief of 87 debate. So be ensured that you take the right decision. What benefit they have given this time by making the amendment, that now onward, prior to this year, prior to this proposal, there was a rebate of 25,000 rupees. Now they have extended it to rupees 60,000. Meaning thereby that if your income is below rupees 12 lakhs, yeah, up to 12 lakhs, you need not to pay any tax. But again, I would like to remind you, it is only for individual who is resident. So if resident individual has income of rupees up to rupees 12 lakhs, there is no tax payable by him. So it's a wonderful provision they have made this time. One more thing which I would like to tell in respect of provision of section 87A, what has been spoken by the finance minister and has been make the part of that particular budget speech also. The any tax special tax rate slab like 11A, 11A, 112 like this will not be entitled for this benefit of rebate of 87A. If you remember last year, some controversy came to the taxpayers that from 5th July 24 onward, there were some changes in the system, and there were levy were made to the short-term capital gain earners who claimed the rebate of 87A were not allowed that rebate, and demands were raised in their hands. So the in this budget, there is a clarity has been made that any special rate taxation will not be entitled for the rebate of under Section 87A. So we should take care that it is applicable for the resident individuals. Secondly, no special tax rates are entitled for this rebate under Section 87A. So now it was 7 lakhs income last year. Now it has made 12 lakhs. One more thing they have made this time, the rebate cannot exceed the tax calculated under Section 115 BAC 1A. So this is another good provision that last time there was just some 5,000 difference. So they have made it clear that the maximum rebate will be restricted to the tax calculation made under Section 115 BAC subsection 1A. So this is all from my side, sir, on these two provisions. And
Thank you. Thank you very much, Satishji, for a detailed. So we understand that very importantly, 87A resident and special income. But this is very important. I'm sure other panelists also would like to give their views on it. First, I'll go to Chitle sir. CV Chitle sir, please, sir.
So Satish ji is a seasoned player in this field of tax, and he has really elaborately put up all the things which the taxpayers have been bestowed upon by the finance bill. A couple of things I would like to supplement his thought process. Uh, as far as middle class taxpayers are concerned, they were disturbed with various freebies which are being offered to various classes, and the upper class was getting benefit of various subsidies and concessional schemes, but middle class was left high and dry. So the feeling is now they went with a bucket. When there is a say paucity of water, you go with a bucket and expect that you get a bucket full of water. But the finance minister has given you a tanker full of water. So that is the feeling with I think the taxpayers that they must be happy. But at this time, as Satish Bhai has rightly pointed out, I recollect that in order to address the tax collection, particularly the direct tax collection in India, the United Nations had suggested when there was weak financial stature of India that you should increase your tax base, because more and more people paying taxes, then you can reduce the tax burden. So there should be more people coming in the tax kitty and not that you drive them away. Okay, one should be happy that till 12 lakh rupees is not required to pay tax, but then the government should be mindful that where the incomes are exceeding 12 lakh rupees but they are not reporting, then they also should come on this tax net. And maybe had government been little less charitable, there would not have been much an issue. Yet another aspect one would consider from the macroeconomic perspective is, as far as this government is concerned, it is trying to bust the black economy. More and more transactions, more and more incomes, and more capital should be reported in white economy. So when you increase the tax-free slab to 12 lakh rupees, I am sure that there would be disincentive for the purpose of hiding any income from the tax bracket. Whatever income you report, ultimately you will be freely able to spend it, to invest it, and that will give fillip to our economy. And maybe what government is expecting, that our GDP rate increment should increase, I think that also would have a positive boost with this increase in this particular basic limit. As far as filing of return of income is concerned, Satish bhai, you will clarify that. Even if you are not liable to pay tax up to rupees 12 lakhs, there is no concession from furnishing return of income. So there may be misconception among some taxpayers that if their income is say 11 lakhs, no liability to tax, so not to pay. It is not so, because ultimately the government wants to ensure that whatever income you have reported is appropriate or not, and then those are the people maybe if 3 4 years their income remains 11 lakh 11 lakh 50,000, maybe government will have to take a call that how the income has remained stagnant for all these years, and maybe these are the people maybe trying to dodge the tax bracket. As far as default tax regime, you have adequately covered that if one wants to access the old tax regime, he will have to make the option. Otherwise, he will be automatically covered under this particular regime. But one aspect, the urban middle class would still continue to be frowned upon as the agricultural income has been left beyond the tax net. In order to make parity amongst income earners, if an agriculturalist earns income exceeding 12 lakh rupees, there is no justification that he should be spared from tax. One would appreciate that it may need constitutional amendment because state governments today have authority to impose tax on agricultural income. But in fairness, now when the tax slab has become up to 12 lakh rupees, the threshold has been increased with concession. I believe that this could have been a good opportunity to also introduce agricultural income tax, maybe by proposing change in constitution. And since the new tax law is being brought about, it will simplify the tax law. I think there should not be much complaint about complication of tax law as well. So I think this opportunity government may consider, if not this year, maybe next year. Thank you.
Surely, Chidle sir, a very nice suggestion, and a lot of people just think that how do you increase your tax base, and agriculturist comes into mind. I'm sure when the new income tax bill comes, something comes up. Otherwise, we'll try to also represent, we'll take views from you and other panelists also, and from an institute's perspective also, we'll try to put our recommendation into it. Yes, Pramod bhai, you wanted to say something on this. Please, Pramod bhai.
Thank you, Chairman Sir, Piyush ji. In fact, Satish Gupta ji has very rightly presented the amendment and the context thereof. And of course, Chirali sir has given his spicing to the presentation made by Satish ji. Just 1 point or 2 point I'd just like to add. First of all, just realizing that the 30% slab rate, which was earlier beyond 15 lakhs, is now beyond 24 lakhs. So that up to 24 lakhs, one should see that the tax rate is less than 30%. Right? Point number one. Point number two, if I talk about that, yes, everyone says, and I also say that India is the fastest growing economy of the world, 6 to 7%. But how much it adds to the GDP every year by the 6-7%? That is around 256 billion US dollars. And if we see the data of the last years, that is financial year 23-24 ITR filings, in India, there was 8.09 crore ITR filed, out of which 4.90 crores were zero tax ITRs. Now, if in the next financial year, those 4.90 crore ITR zero tax, it remains zero tax. If it remains zero tax and yet remain up to 12 lakhs, then it would add 283 billion USD dollars. 283 billion USD dollars. So just a food for thought for everyone that yes, more and more people should come out. We should encourage people to show their correct incomes wherever possible to add to the India's GDP. Thank you, Chairman.
Thank you. A very nice perspective, Pramoji. But I believe, as so yes, I think so. You are raising hands. Surely, I'll come to you, Satish. But I'm definitely government is now sees that whenever you are reducing tax rates, compliance increases. And I'll just take an example when finance minister said that by this provision would we be losing 1 lakh crore in direct tax revenue. But at the same time, they've estimated increase of 2 lakh crore increase in revenue receipts. So there is a 1 lakh by relief, 2 lakh increase. So net 3 lakh crore increase. I am sure their idea is with the compliances only that people will come forward, show better income. And as we all know, being a professional body over here and been also advising, we do know to certain extent how assessee generally behaves when it comes to payment of the tax. It's not purely the what income they earn, but what tax they want to pay based on which they actually file. They want to file the returns. So that's an yes, Satish, please.
Sir, Chairman sir, I just want to tell what Chitlenji asked that return filing is definitely the if we refer the section 139 subsection 1 and if you see the maximum amount they have referred maximum amount not chargeable to tax. If it is above that, the assessee has to file the return of income. And that in each case, this case in the new regime also, it is 4 lakh. So over 4 lakhs, return filing is compulsory for all persons. If they are earning more than 4 lakhs, so they will have to file the return of income. Second,
Correct.
sir, I was just wondering that if a husband and a wife both are in salary in job, their incomes are exempted up to 25.50 lakhs. So you see that if we add the standard deduction also, if you see that what a family of two persons in employment can, what can they do? They are out of tax net. They will have definitely to have to file the return of income, but still they are having a good funds in their hands, and the what finance minister was having in her mind, that it will increase the spending and they will cover the entire loss of rupees 1 lakh crore which you asked just now. That will They will cover it out of their budget increment, and thereafter this spending also. So and sir, see that the question is a very big question we have, that whether our country is moving towards consumer based economy. What Either we are going to depend solely upon GST, that you spend more, you pay that GST, and we are happy. So, if it happens, then definitely what concern Chitleji has raised, the agricultural income must also be taxed at least over a rupee 12 lakhs, even after amending the constitution. And just this is my value addition, sir. Thank you very much, sir.
Thank you very much. Yes,
Sir,
Namaji, please.
just one point. Not, I'm just saying the other ease of compliance would be that for the salary TDS returns, the smaller ones would be exempt. There would be no requirement of deduction of TDS.
Correct.
So that compliance burden
Yeah,
is also
so
reduced.
there won't be salary TDS deductions under 192 up to 12 lakhs. That's
Yeah.
no, it's a huge relief to a lot of taxpayers. What we understand is, just for the information of panelists and the other members also, today just 2,700 viewers are online, and it's a good number, very huge number. Thank you very much to all the members. 3,000 almost. So now I'm just taking it forward to personal taxation, and obviously when we are talking of, because Pramoji has already raised question on TDS, I would like to throw upon to the go back to Chandra Shekhar Chitleji. What are the important provisions, sir? If you can just highlight, as far as, because budget finance minister did says that I'm giving rate and threshold limit changes in TDS. So how would it impact, and what are the changes, major, sir?
So TDS would be a great relief for the purpose of businessmen and all those who are subjected to TDS. It is for the simple reason that industry for long time has been canvassing that when the government boasts that it is the country where the cost of collection per crore rupees of direct tax is the lowest in the whole globe. But then they say that most of their costs are shifted on the shoulders of business, because TDS is one area where substantially the funds are collected, and the entire administrative costs of maintaining that TDS, doing TDS, making payments, filing returns, if not filed, maybe paying interest, paying penalties. So all those things are on the head of businessmen, and that is why the cost of collection of income tax is one of the lowest amongst other countries. So, from this perspective, if we discuss, and as Pramod Bhai also said, that doing away with several instances where TDS was required, it will lead not only to one consequence. One is you get relief from making TDS, so that your administrative burden is reduced. Your cash outflow will remain stationary, because maybe if you don't pay to the government, you will have to pay to the payee. But this administrative burden, furnishing return of income, then again issuing TDS certificate, all those things would be done away with. For those from whose income the tax is getting deducted, for them also they are on tenterhooks. At times it is seen that if they don't receive the TDS certificate, they do not get the credit. At times, TDS credit does not appear in their income tax data in Form 26A and such other forms. At times, even if it appears, the assessment procedure is mechanized, and at times it fails to take into consideration the credit for that TDS, and then there are several rectification appeals which come aftermath. So that headache also would be done away with. In this background, let us see principally what are the changes which are proposed in this TDS and TCS. So there are six areas for changes. One is the rate reduction. The rate of TDS has been reduced in certain cases. We'll come to that. Then threshold has been specified in certain cases where it was not there. Say in case of like dividend interest on securities, or if the threshold has been prescribed, it has been enhanced to a substantial interest. In most of the cases, it has been doubled. Then, in case of business assessees, there was duplication. In a sense, the buyer was expected to do TDS under 194Q if the turnover exceeds 50 crore. If the seller was buying more than that, he was expected to collect TCS. So they were on tenterhooks. So this particular provision of TCS has been done away with. So duplication has been avoided to that extent. The rate of TDS and TCS were prescribed at a higher pedestal, where the person from whose income the tax is to be deducted or collected has not filed the return of income. And there was complaint from taxpayers that it is very difficult to find out whether he is a non-tax filer. So this particular provision of higher rate of TDS from non-tax filers have been done away with. In case certain time limits for the purpose of making payment of TCS, they have been increased, and particularly the decriminalization of this TCS. If the tax you have collected and you have not paid to the government, you are harboring government money. So the prosecution was to be initiated. Now, in line with TDS, if you have collected tax at source but paid on or before, maybe after the due date for payment, but maybe on or before furnishing the quarterly return, then in that cases, those cases are also spared from the purview of prosecution. So to an extent, they have also carried out decriminalization of this particular aspect. Maybe whenever we have time permits, we'll come to details later on. But
Yes, thank you very much, Chitla sir.
and
Yes.
one relief
Hmm.
which Pramod Bhai and they also pointed out, that in case of salary person, I think there will be substantial reduction in time and efforts of the employers and employees in collection of TDS and payment, because this limit has been almost increased by say 70-80%, because after 7 lakh, if the salary increases, then the TDS was applicable. Now in case of 7 lakhs, that would be 12 lakhs, and if you add standard deduction to it, it would be 12 lakh 75,000. Beyond that, if the employee is earning salary, I think there would be requirement for making TDS. So huge relief.
So I've seen across the board they have increased the threshold limit of TDS deduction. Like for professionals, if we talk for a chartered accountant, it was 30,000. Now it's 50,000. It makes sense when your taxable income slab itself is going up. Your maximum amount which you don't pay in tax is going up 7 to 12. I'm just thinking, Chitra sir, why 194C was not touched when increase in slab was being considered? Of course, this applies TDS, and the slab rate has gone only for individuals, whereas TDS sometimes is also applicable to corporates, non-corporate, but there is no relief. But 194C, small proprietors, small entities, 44AD units also possibly. उसमें limit increase हो जाना चाहिए था, or we should also recommend. What do you think?
So with the inflation, I think the limit should be adjusted to the inflation. If you think that at a particular point of time 20,000 is appropriate, 25,000 is appropriate, and thereafter if the value of money goes down, then maybe you can adjust those limits automatically. So definitely one expects increment in this threshold limit. But if you consider that as opposed to other things, if you are selling the goods, if you are paying rent, everything happens through banking channels, and the person who is recipient of money is booked for the purpose of reporting his income. In case of this 194C, where jobber charges etc. are paid, and they are small workers who are working on their own, and they may or may not be in these banking channels, if small amounts are paid to them, and those amounts are not reported because those job workers are far flung across the country. As far as sale of goods is concerned, if not income tax, via GST channel, one is able to book him that okay, he has received some money, he has paid some money, so one understands what income he might have earned. But that is not the case in case of service providers, because for service provider also, maybe he's a small service provider providing services up to 20 lakhs, he is also beyond the GST net. So that may be one of the reasons that government has not considered 194C for the purpose of increment in this particular limit.
But I think so, as you rightly said, that limit should anyways increase based on the inflation, based on trends. We'll try to represent on that also. Whatever limits are currently
And
available, we
also
can
there
try
is
to
one
do that.
protection to the government, that even if to a job worker, whenever a businessman makes payment exceeding 10,000 rupees, those payments are required to be made through banking channels, then only they qualify for reduction. So rather than relying solely on TDS, they also can get the information from the deposits made in the bank by these small people. And nowadays, banks, in case of businesses, are not opening accounts unless there is a permanent account, PAN number. So maybe at their end, now because of this faceless assessment, there is a reduction of work time, because you are not going appearing before the assessing officer giving replies. They are straight away getting the replies, so that time has been saved. So they can utilize this particular time in data mining rather than increasing the burden of taxpayers.
Okay, sir. Thank you very much. Before, yes, please. Pramod, you would like to say something about this? TDS? Yes.
Just going, we are discussing the limits later on or right now.
No, you please give your comments. Yeah.
In this limits, three important points. One is for my lottery, crosswords, and horse race. Earlier, the limit was 10,000 in aggregate for the whole year, and it was very tough practically to determine that, to see that the whole history of that person, for that particular person the director has to see, okay, when did he cross 10,000. So now what the amendment is there with effect from 1st April 25 is 10,000 rupees per transaction. So per transaction they have to see. And the second one, if I talk about the rent, which was 2,40,000 per annum, in the budget, the Honorable FM said it is 6 lakh rupees per annum, but actually the fact is it is 50,000 rupees per month or part of month. So the impact thereof is that suppose you take a premises on rent and the rent thereof is 75,000 and you take in the month of say March. So even though it is not crossing 240 or now 6 lakh, still you have to deduct TDS because it is crossing 50,000 per month. The same limit 50,000 per month is in the case of 194(1)(b), where the director is an individual or HUF, and in that case, if they are not covered under 194I, then they have to deduct, but at the end of the year, in the month of March. Here it is for the whole year. If for even 2 months it is there, 1 month it is there, or part of month exceeding 50,000 rupees per month, then yeah, of course you have to deduct TDS. Second point out here, third point here, for salaries, we know that up to 12 lakhs, no TDS. For rent, we say up to 6 lakhs, 50,000 per month, no TDS. But they have not touched 194T or omitted, or I just don't know. So 20,000 TDS is required to be deducted on the partner's remuneration. I am hoping that the DTC would be giving a post-budget representation that this 20,000 per month, because the determination is based upon my book profit 40B, which is determined when the financial statements are completed, and 10% thereon. So that is still an untouched area, which was brought in by the last Finance number 2 Act 2024 with effect from 1st April 2025. It remains unless there is an amendment to the Finance Bill. So there also we need to have a detailed discussion out there.
Like
TDS from partners remuneration and interest.
so,
But you are right. However, if you look at the other TDS provisions, which they say that okay, if you credit or pay whichever is earlier, then you have to deduct tax. And there they have given an explanation. If you credit to any account, including suspense account, that will amount to credit to the account of the payee. Now, in this case of partners, etc., this particular explanation is conspicuous by absence. Therefore, a debate may arise, and that has been left alone by the finance bill. It has not been touched. So, supposing a partner's remuneration is there, you finalize your accounts in maybe September or August, and at that point of time, instead of crediting the remuneration to the account of the partner, if it is credited to outstanding expenses account, if it is credited to expenses payable account, whether the provisions will apply. Because when specifically in some sections you clarify that whatever nomenclature you give to the outstanding expenses account, it will be deemed to have been credited to his account, and this particular explanation is missing in this section. So I think
But
that controversy will continue, and the time will
that is
endure.
a different
Right,
thing.
sir. Right, sir.
And one another aspect, since rent you have touched, see, as you have rightly said, it is 50,000 rupees per month. So supposing if you have taken the premises on rent for 15 days and you are paying 30,000,
Then
then
also
even if the amount is less than 50,000, it will cover.
part of
And in
it.
earlier regime, maybe 1 lakh rupees rent you have taken in February and March, that was going out of this tax net.
Correct.
But come what may, this concession is welcome.
Right. So thank you very much. Only thing what I could answer Pramodji is 194T. I believe they did not tinkered it because it is getting implemented from 1st April 25. So it is saying how can I tinker it when I had brought it just which is getting implemented from 1st April 2025. Possibly they didn't want to prove that that was a wrong or the limits were not thought at that moment of time because it's I think so it's amending before the it gets applicable, so probably they have not taken a call, but anyways we'll be representing through a post budget memorandum. We did in pre-budget also to re-look into this provision, but of course because all are the members only I can discuss over here, they were very much they said possibly will not touch it right now in the meeting itself. So, anyways, before I go to Pramoji on other things, because we are discussing personal taxation, I would like to close on this personal taxation. So, again, I'll come to Satish ji. Satish ji, can you just throw some lights on? Obviously, when I talk of NSS, I feel very proud because it was a representation done by institute. So, there is some change in NSS, there is some change in perquisites also somewhere. If you can just touch those small provisions quickly. You are on mute, sir.
Ajay ji.
Yeah.
If we talk about the NSS, it come to our mind that Section 80 CCA was brought to the statute in April 88, 1st April 88. And the provisions are that if whatever amount you deposit in that NSS account, that will be exempted. And it was this particular provision was there up to 1st of April 1992. So subsection 2 of this section 80 CCA provides that where such amount along with interest is withdrawn, it shall be taxable. So what happened? Since this scheme was closed, and interest was credited in these accounts. But what happened? That Department of Economic Affairs brought a circular on 1st of October 24, on 29th of August 24, that we will not pay any interest in these accounts. Then several representations went to the government that this is not fair since the interest has been stopped, and if we withdraw that amount, we will have to pay tax. So then this is because the government has brought this provision that if after 29th of August 24, any withdrawal is made out of NSS account, whether of principal amount or of interest amount, will be exempt. So this is all about this NSS provision what has been brought to the budget this time. So this is I have told the history that when it came, what was the provision and what happened suddenly that government has to bring this particular provision. And if we remember, there was a circular of the CBDT also. If a person died and the withdrawal is made by his or her legal heir, then also it was exempt income. So in that line, this provision has been brought that because of this interest stopped by the government, now if withdrawal is made out of NSS account, that will be tax free. This is, but this amount, what amount will be tax free? Deposited prior to 1st of April 1992.
Okay.
So this is about NSS,
Okay.
and about the perquisites also. So say it calls us Section 17, and Section 17 defines salary, perquisites, and profits in lieu of salary. कि कैसे डिफाइन होगा, व्हाट आर दोज थिंग्स. एंड सेक्शन clause 2 of section 17 defines the perquisites. So what did this means that sub-clause 3rd of this clause 2 of section 17 says that the value of any benefit or amenity granted or provided free of cost or at concession rate to following persons. So there was a list of persons by a company to an employee who is a director, by a company to an employee being a person who has a substantial interest in the company. And third one, that these two conditions are not there. But if the GTI, gross total income of 50,000 rupees or more of that employee, if that particular relief is perquisite is paid to him, that will be taxable. So 50,000 rupees limitation was fixed on 1st of April 2002. That is prior 22 years, 23 years back. So the government thought that it is too long, that a limit is very small, and prior to 1 April 2002, it was rupee 24,000 only. So now they have not specified the limit or amount as of now, but they have said that in the amendment, the instead of rupees 10, such amount as may be prescribed. They have mentioned to that there will be separate notification about the amount. So after that, we will put the amount there. But as of now, we can understand that that limit is not there, and after getting the amount, that will be more clear. Likewise, subclass 8 of section 17(2), if anybody travels for medical purposes to outside country, so there are medical expenditure, there are attendance expenditure, there are travel and stay expenditure. Those were also restricted to the amount of rupees 2 lakhs. If the GTI of that particular employee is up to 2 lakhs, then only that was exempt. That particular receipt was exempt in the hands of employee. Now what they have kept that again they have mentioned it that instead of rupee 2 lakhs rupee, the amount as may be prescribed. So these are the two changes in this section 17 perquisites part, that the limit of rupees 50,000 for the value of any benefit or concession, and limit of rupees 2 lakh for the foreign travel for the medical purposes, that has been changed. The amount is yet to come, but they have mentioned it that now new amounts will become, and that will be according to that inflation and all other considerations. So these are the change in the perquisite part.
Thank you very much, Satish ji. Thank you.
I think Satish ji has given very good news about this NSS to all the viewers. But Satish ji, as far as section 194 EE is concerned, which talks about the TDS from NSS withdrawal, where the limit has been continued to be 2,500, it has not been tinkered. So, do you believe that maybe while the finance bill is being finalized, I think this anomaly may be ironed out?
Yeah, I get your point, and a valid point, sir. I think it should be there. Otherwise, where the income will be exempt, there is no purpose to keep that particular deduction.
Correct. Right. So we will also make a representation, I think. So when it's an exam, there's no question of TDS.
Yeah.
I welcome our fourth panelist, Pankaj Shah, CA Pankaj Shah from Indore. He's also a Central Council member to be swearing in from 12th of February. Thank you very much. He's also expert into IT litigations, NCLT. Thank you very much, Pankaj Bhai, for joining. Pankaj Bhai, we were just
late because he was addressing a budget symposium.
So Pankaj Bhai, of course, before you came, we thought we'll just discuss personal taxation amendments, and we have almost done through. I'll just come to you. He's one of the youngest panelists, so I thought I reserved some questions on startup for him. Being young. So I'll come to you, Pankaj Bhai.
Just one point on what Satish ji said. NSS. So will that receipt of income, so contribution, what about the interest, and where is that exemption section under section 10? For an exemption, it has to be somewhere in section 10, na?
Correct.
So whether it is there for the principal, for the interest, contribution made, what about interest? That clarity, I suppose we should have.
Okay. No, but I think so. Whatever is amount accumulated up to 1st April 92, that's what Satish ji was mentioning.
No, contribution made up to 92.
Not interest accumulation.
No.
Okay.
So we need to have a clarification, exempt under which section. It has to be under section 10 somewhere. So the principal, the interest, the total amount, what for that we need to have a section in section 10.
Definitely.
Yeah, but because whatever
So kindly note.
principal you contribute is not an income. So this
Earlier
interest
it
was
was.
deferment of income.
No, sir. At that time, the
Deferment
deduction
of
was.
tax on whatever amount you deposit.
Yes, sir.
So
Deferment.
whatever you withdraw is already your income. So it was EET.
Hmm.
While it continues to earn interest, it was exempt, but it was taxed only at the end. As Pramod Bhai has said that maybe they have said contributions, but interest will have to consider, because maybe on a standalone basis under section 56 that interest may be income, and they have not.
But
There is no clarity.
even for making it taxable, then section 10 should contain something. Huh?
Tax free, for tax free they have to include it somewhere. Of
Okay.
course, in whatever section they put, I think they have authority. If they put in some other section,
Amendment is required.
amendment is required, and there has to be clarity. Otherwise, again, it will go in for litigation.
So taking it forward,
What litigations we are expecting in this, Pramod bhai?
That the amount withdrawal from NSS would be exempt from tax, that has to be there in section 10 somewhere, na?
No, I got that point, but what litigation you are expecting? Who will litigate?
The department.
Income tax officer, sir.
okay, sir. So we're taking it forward. Of course, before I go to Pankaj Bhai, who has just joined in, I will before that Pramod ji, because we are discussing individual taxation. Now there is some tinkering again with updated returns, and I could heard here a finance minister stating that after 2022 it came 90 lakh some updated returns were filed. Of course, 90 lakh should be for a period of 2 years, I understand, 2022 to 2024 or 25 till today, maybe. So, but what is the changes which has happened? If you can some detail throw light on that.
Thank you, Jayman sir. In fact, we all know that since 2022, there is an amendment under section 139, 8A was brought in, wherein earlier, there was no provision. Earlier, there was a provision for filing for umpteen number of years, then they restricted it that only one up to that year you can file. Later on, you cannot file. Then ITRU came that you can file for 2 years. That is, after the end of the assessment year, you can file for two next assessment years, 2 years for the previous assessment years. So suppose any person has not filed his income tax return for the assessment year 24-25. Now he cannot file. He can file post 1st April, and that is for 2 years for March and year ending 24 or 23. So now with this amendment, which is effect again from 1st April 2025, so instead of 4 years, they can file for 4 years. Instead of 2 years, they can file for 4 years. But what was there that if a person could have filed his return, updated return, in that case, certain conditions were there that there cannot be a loss return or there cannot be a refund return. So all such certain conditions were there, but the amount of tax which was required to pay tax plus interest, the additional tax and interest, for the first year, if the return is to be filed, then the additional tax was to be paid 25%. Suppose return was to be filed for assessment year 24-25, on which the return was already filed, say, and the due tax of say 1 lakh was paid, and the additional income which is declaring in the new ITR, the updated return ITR, where the tax and interest comes to say 1,50,000. So 50,000 is the additional tax and interest. So on that, another 25% has to be paid, right, to file for the first year. For second year, that additional rate of tax was 50%. Now these 2 years, third year and fourth year, they have added. So third year additional tax rate of 60% and fourth year additional tax rate of 70%. It is not 60 or 70% or 25 or 50% is not the additional tax on the income. It is the additional tax and interest on the tax. So what would be the effective rate of tax on that income, I would say. So first year it would be 37.5%. That is, if I take the slab rate of say 30%, it is 30%. Then on the 30%, another 25% will become 37.5%. So 50% additional tax. If we take a slab rate of 30%, then 45%, and similarly 60% it is 48%, and fourth year it is 51%. So it is not that 70% of the total income. However, up to the first 3 years, there is one more condition that there should not be any notice issued under section 143 or 148. So the first year, 3 years, there is no issue. Fourth year, if an assessee is getting a notice under section 148A, a show cause notice under section 148A, then for that fourth year is not eligible to file the updated return for the fourth year. However, in case that show cause notice has been settled and an order has been issued, that no notice under section 148 is required. In that case, still in the fourth year, the ITRU can be filed. It means that the department has issued a notice under section 148A saying that okay, these are certain incomes which you have escaped assessment. Then the AO, you have given submissions, then the AO settles that okay, these are not the incomes which have been undisclosed, and thereafter the CC realized okay, these were not there, but some other incomes that escaped, or these were still escaped. So even after that, he can go for the fourth year and file his ITRU, pay the additional tax. Basically, I will say this is an opportunity where they want the litigation to be reduced. So up to 4 years, certain assessees come, they want to file the return for the 3 years for certain purposes of loans or visa, something like that. Now they can file, but then again, the additional tax has to be filed thereof. And in certain cases, it could be on the minimum side. Suppose the additional tax, additional income is say 10,000 only. So what is the on that? If say tax slab rate is 30%. So on 10,000, the tax rate is 3,000. So if it is for say fourth year, then it would be around 50%. That is 5,000 rupees tax. So he can still file. Or let us take a case that he realizes that he has omitted. He has actually by default he did not file the detail of his foreign bank accounts or foreign accounts where he was signatory or foreign assets. And we know that under the Black Money Act, the penalty for not disclosing that is 10 lakh rupees. So he can use that opportunity to update his return with the additional income, whatever he has missed out. So all that, basically the purpose is what the FM said, trust first, scrutinize later. So all this benefit could be there. So starting from 1st April 25, you can file the returns for 4 years, subject to the other conditions of 148 laws, refund, and all those things. One can do that. Thank you.
Thank
So,
you.
are you saying that this is a permanent VDS for 4 years,
Yes.
but the tax rate is less than what was there for VDS 60%?
Yeah, it could be. Yes.
It would come down to same as he said, 51%, 48 plus I have to add 3 years interest. Interest is there. So
Interest,
tax rate
that
would be
would be
48
interest.
plus interest. So even if I take a 10% interest average, 12% per
It
year,
is only interest, sir. It is surcharge, all the
cess.
taxes plus interest.
But anyways, only thing, one benefit which I could think of is 148A subclause B. Show cause notice is also issued. Of course, now amended is not subclause B, it's subsection 1, 2, 3, whatever it is.
Yeah.
So then also I can still opt for this particular scheme up to 3 years. And anyways, now reopening provisions are up to 3 years only. As far as general provisions are concerned, beyond that is only about 50 lakhs. So if it is within 3 years provision, if some show cause notice comes, and I take a view that no, I do not have a good case, I can really opt for and pay 60% and buy peace possibly.
The only thing is, if you pay normal tax, there is always a thought process of levying a penalty.
A
to
penalty,
78. So
which
here
may
the
or may
penalty
not.
is always.
Penalty is already paid, I would say 30 plus 30. And that penalty here, you would say that I may pay tax, but penalty still I can contest.
Under reporting, it could be
Another 200%.
Misreporting, it could be 200%. So
Correct.
that peace of mind, basically peace of mind.
So, but I believe that it's a good scheme in
good.
extending it. In fact, updated return, we had also sought time through our suggestions. Of course, we had not asked to have a higher tax rate. We did ask, of course, they have considered well. So, I'll just move it forward from this updated returns. And because Pankaj Shah is also there, and I would like to, there are, of course, on startups, because nowadays startups is a buzzword, and a lot of our individual chartered accountants who have joined are providing services to startups that are engaged in a startup. What are the tax benefits which have been proposed in this finance bill 2025? If you can throw some light, Pankaj bhai, please.
Yeah, thank you, Piyush bhai. Startups, as you said, is still the buzzword. and there was a sunset clause which said that only those startups which have completed or which have started their manufacture their activities by 31st this 25, it was expiring, the sunset clause was there, so they have extended it for next 5 years, and rightly so, because the startup era is not yet over. So to stop the benefits would have been too premature. As such, there's huge confusion regarding startup. People don't realize that there is a MAT provision which is already there. Even the Startup India website says there won't be any tax. However, the fact is that yes, there is a exemption for normal taxes under 80 but there are MAT provisions which are already applicable under 115 JB. So therefore, it is not that there is a complete exemption, but MAT is still there. So one needs to take a conscious call whether they want to opt for 80 or not, because if you don't opt, then you come under 22% regime. So the differential rate, yes, is 7%, but still that is a benefit. So yes, there is a benefit, but how much useful is to be seen. In this present budget, they have increased the time limits from 25 to 2030. So 5 years extension they have given to the sunset clause, and that is it for startups as such.
Okay. Just taking it forward to crypto assets, there is some changes which I've been told in regard to furnishing information in regard to crypto assets. And again, those crypto assets people are also basically a startups only. What I believe is, what's that? Is it some increase in compliance mechanism or something else?
See, with regard to cryptocurrency, that is on the radar of government, I would say, because cryptos are highly unregulated market, and since there is no, because this is an international currency, international phenomenon, therefore India as a country wants to maintain its sovereignty as regards this crypto, and they are putting different kind of restrictions. They want a complete track on it. Therefore, as we have seen the AIS mechanisms where they collect information and reporting entities are required to report what all transactions have been made. So under section 285 BAA, they have come out with a specific requirement in this case where one needs to give the details of all the transactions in a crypto by way of a statement akin to basically a annual information statement, and what all information would be required to be given, when it would be given, all things would be prescribed. So basically they have put an enabling provision so that the reporting entities which are carrying out these transactions, or through which these transactions in cryptos would be done, trading would be done, investment would be done, so they would be required to give reporting of what all crypto transactions have been done. So this is very important as far as a national issue is concerned, to maintain the sovereignty, because this crypto transactions, many illicit transactions take place in cryptos. So it is on the highest priority of the government to put some regulations on it, and therefore they have come out with this reporting requirement. As you have seen in last 3 to 4 years, there was a deluge of notices to many taxpayers who have entered into transactions on various platforms. What had happened that government had taken some search actions on various entities through which this kind of transactions were there, and they had some kind of information. It was not full concrete information based on which many reopenings were done. So now they want a proper structure through which they are 100% aware what kind of transactions in cryptos are done. So even if you now have to sell any cryptocurrency, that would be recorded. So things would come into the regular channel. So welcome move as far
Yeah.
as cryptos
So
are.
I believe, of course, this burden of compliance would not come on traders or who are buying selling crypto. It would be more on the exchanges or the intermediaries or something like that. Am I right?
Yes,
If my
yes, yes.
understanding is right.
Absolutely, because the whole mechanism is yet to come, and for individuals or traders, this kind of reporting compliance is not feasible, because every time you enter into these cryptos, and a general survey was done very recently, where it was found that every second youth individual who is going into college is doing transactions or trading in this crypto. So
Yes.
it is not possible to uh, impose the requirement of reporting on those people, so it will be on the exchanges only. Expected.
Mr. Chairman,
Yeah.
as it
As
was
a
informed by Pankaj Bhai that government is frowned upon the transactions in crypto because nobody knows ultimately who will honor the value of that crypto.
Okay.
But recently, it came to my notice that after the Trump took over as a president of USA, US Treasury is considering some of this portion would be kept in cryptocurrency. Some European countries are also believed to have thought of like gold is kept as a sovereign backing up. So likewise, they are considering some portion may be kept in crypto. So I think those developments are there. Uh, Not in that sense, but several countries have this, like we have CBDC, that's centrally currency which is on crypto basis. Now, for bank to bank, they have started, and these cryptocurrencies by government are on anvil. So maybe as the years pass, we will know more about these cryptos.
I think so. There is some, Chitra sir, if I have not mistaken, this year also there is some tinkering with definition of capital asset. Is it in regard to this or something else?
Uh, yeah, as far as capital asset is concerned, as you are aware, that why the definition of capital asset is important, because some concessional treatment has been given to sale of capital asset and income earned out of it. That is because you are not intending to be a trading in that particular perspective. You are just investing in a particular asset, and as the time goes by, inflation also takes out some of your earnings. So the paper earnings are different and your real earnings are different. So to give concession of those inflationary trends, some concessional tax treatment is given. Like earlier, there was indexation. Now the tax rate itself is reduced. So what was happening in case of foreign institutional investors? This particular capital asset definition included the equity and securities. So if they supposing there is no PE in India, then in that case, if that becomes a business income, that was not liable to tax in India. So it was clarified that as far as those FIR are concerned, their holding of securities, etc., would be a capital asset. So undoubtedly, when they sell, either short term or long term, there would be incidence of capital gain.
Okay.
Likewise, in case of foreign institutional funds, there was no clarity whether they should get this benefit, they should not get. And essentially, whatever incomes they have, generally they have a pass-through character. But where it is taxed in their hands, which is not coming into those definition of capital gain or this, and goes to business income, it was taxed at a maximum marginal rate, and ultimately it was also not having a pass-through character. So, in order to clarify that, yes, as far as these foreign institutional funds are concerned, in their hands also this particular securities and shares would be equity, would be capital asset, and accordingly whenever it is transferred, it would be taxed as a capital gain or not as a business income.
Okay. Okay. Thank you, sir. Yeah, just because we were discussing foreign institutional investors, and I'm reminded, of course, we have a time limit. Of course, we have another 45 minutes to go. But just if we can touch on some international tax provisions in between, I would request Pramodji, is there any amendments on international tax front, arms length price? I was been told. If you can just throw some light on those.
Yeah, there are few amendments on the international tax. First of all, yes, another presumptive taxation has been brought in under Section 44 BBD for non-residents who are providing the services or technology to a resident company which is operating in electronic manufacturing facility or other connected services. Basically, I would say for the semiconductor industry, where they have said that the total of the income received by such non-residents, 25% would be the presumptive tax. Now here again, they have not given that if suppose such entity is having loss, so they can go for a lower one, or they can get it audited. So not that is not there. So straightforward 25% they have to go. There is no option for them out here. Uh, Another, if I talk about, of course, the transfer pricing, like search is now a block assessment, updated returns we have got 4 years. So the transfer pricing also they said that we would provide you a block of 3 years at the option of the assessee. At the option of the assessee. Now suppose once an assessee's case is picked up for scrutiny and it goes to the TPO, and TPO assesses certain percentage. Suppose the assessee has declared his benchmarking rate, the transfer pricing at say 3%, and the TPO says 5%, and the assessee agrees. And the assessee agrees. So suppose the next year there is a case, then assessee can file a application that whatever has been determined by the TPO in the last year, that should prevail and there should be no further discussion thereon. So the procedure has been given out there. So that thing would be there for 2 years. Again, that is the option. In case the assessee has gone into litigation and he feels that no, his determination of the arm's length price was quite appropriate and there is no requirement that he feels that the next year also he can still fight and says that okay, whatever I have determined is final, and he may opt not to go for that scheme of 3 years. But if he goes for 3 years, then on the application the TPO will have to declare that option is valid subject to the conditions what he put in. So these two things have been done in the transfer pricing and
So basically, it's an idea of bringing a certainty.
certainty.
So instead of undergoing a TPO assessment
Every
every
year.
year, if some assessment has happened, but you have to exercise option before the assessment takes place.
At that
So I exercise an option presuming that only some adjustment will take place, and if suddenly after exercising an option, instead of 100, 300 is added, I am binded.
no, if after I have opted for an option.
Yeah, I have opted for option that
Then
whatever
within
TPO
month.
does will be applicable for 3 years. Now,
No.
yeah,
It would be 1 year I have already done my assessment,
okay.
and the second year I have to make an application.
Okay, so option would be second year.
Second
only.
year.
Okay.
Whatever is decided in the previous year, then I have got the 2 more years.
So for assessment year 24-25, some addition has been made, some adjustment has been made. I accept that. I exercise an option. Even 25-26, 26-27, I need not worry about TPO. Assessment.
Right. Second case, he agrees to my arm's length, doesn't make any addition. Still, I can go the next year. Okay, you have agreed to same transactions. Fine.
Okay, so even if there is a nil adjustment, I can
Yes,
take an
why not?
option. So then to TPO officer, I think so a lot of work will go down with TPO officer.
Yeah,
Because a lot of big
professionals
corporates
are
would
saying.
take an option that yes, there's no adjustment, so at least I will, I would say, ring fence my next 2 years.
Yes.
Pramod, one appreciates that, okay, say 24-25, the assessment will take couple of years, then it is finalized.
Say 22-23 right now.
Okay, so 22-23, it got completed now, and you want to exercise that option for subsequent 2 years. So you will make an application. But by that time, the time for filing revised return would be over for payment of taxes. So any comment on that? How one would pay taxes?
You have got
compared-
updated return now, no?
So no, if you file updated return, then there will be another penalty of paying
Additional
You have
tax.
agreed.
additional tax.
You have agreed, na?
No, we have agreed that okay, the manner in which you have increased. See what happens. We are talking two situations where he has accepted your return. In that case, maybe if you give the application, there is no tax consequence.
Right.
But if there is some say 10% enhancement, and you want to say that okay, we go with that 10% enhancement. So they are saying you make an application.
No,
So after
actually, they have brought in another section, section 155 of section 21. That in such a case, how it would be determined. So that computation is there under 155.
so, is it better that solicit order under 155 than pay taxes whatever is
Then
determined?
you have to apply under 155. You have to make an application, that determination would be there.
Correct.
And of course, the rules would be coming again then also.
Other than these two not major changes in as far as the international tax regime is concerned,
Yeah, these two only, and then other, of course, of IFSC is there.
IFSC itself is a separate. Of course, we'll go
lots
there
of-
when,
lots of
if we get time, I'll go to IFSC. But considering my membership, I'll come back to Gupta ji. Gupta ji, I think so. I missed all adjustment on personal taxation in regard to house property. There was some changes which has happened. Some conditions have been removed or something. If you can just throw light on some that. You are mute, Gupta ji.
Thank you, Chairman. You have just reminded me of Section 23, which the Finance Minister made the change proposals. And you see that Section 23 deals how the annual value is determined in respect of income from house property. Subsection 2 of Section 23 deals that where the property consists of a house or part of house is in occupation of the owner for the purpose of his own residence. And second part is cannot actually be occupied by the owner because of any reason. Reason it was mentioned in the provision that because of owing of his employment or business or he is out of his town, then but now the finance minister brought a very good change, very welcome change, that now they say that there is no need of any condition. There must be house that is SOP, that is not used by the assessee for any reason, that is eligible for the nil annual value. So this is the change ki annual value nil will be determined in case of house, not only one house, because there is no section 23 subsection 4. So there is a availability of exemption for two houses. So assessee, if the assessee owns two houses used for his own purposes but does not use for any reason, now there is no give, you will have to tell the reason that how did not use this particular house. There is no need to tell the reason. If any there is no use for any reason, he is entitled for the nil annual value of the those two houses. This is the change in the budget, and it is for me that it is very welcome step, and because there will be no litigation. Otherwise, the assessee was not in position to tell what were the reason that I was living in the Jaipur only. House was also in the Jaipur only, but there was no litigation. So there was some litigation, but now there is no room of the litigation. For any reason, if the house is not used, that will be nil annual value for that particular house.
Agreed, sir. A very welcome move. It goes with what government is saying. You bring down the conditions because if there are too many conditions, then obviously people try to circumvent to meet those conditions. I think so. Thank you very much. Of course, I will again go back to Indore, Pankaj Bhai Shah, who is in Indore. In the budget speech, and whenever we are listening, that there is a lot of things been done by the government on decriminalization of certain provisions. And when I talk of Income Tax Act, if I talk of decriminalization, obviously what comes to my mind is prosecutions. And why penalties also, though penalty is not criminal, financial penalty, but obviously if the penalties are high, it looks as if it's a criminal sometimes. So if you can just throw lights, is there any relaxation, reliefs, and whatever in penalties and prosecution provision, if you can cover up that? Yes, Pankaj.
Yeah, thank you. Basically, first, there is a consequential amendment. In the last budget, there was an amendment that when a TDS is deposited delay, you get some time. Hello, am I audible?
Yes,
Hello.
you are audible very well.
Yeah.
Please go ahead.
Hello.
We are able to hear you.
Yeah. Right. Right. So in the last budget, there was an amendment for TDS. That if the TDS, right, so that delay would be condoned and there won't be any prosecution based penalty. This time they have included TCS also into this. So when it was for TDS, similar logic goes for TCS. So this is a consequential amendment as far as TDS TCS is concerned for prosecution. Secondly, we know there is an immunity under 270 AA for penalty and prosecution. That if a person does not want to litigate, pays the tax within a month and files Form 68 after the to avoid litigation and accept that the penalty may be waived, section 270 AA gives the immunity. Now, what was provided in the law that once the application is filed, the assessing officer has to pass an order within 1 month from the end of month in which the 270 AA application has been filed in Form 68. They have extended the time limit from 1 month to 3 months for processing of that return. However, what we should represent before the government is to provide more time and some option of condonation, because it so happens that the taxpayer misses this 1 month timeline to file Form 68. So they have given time of 3 months to AO to pass the order so as to give the immunity, but they should also give some relaxation, some condonation option where there is a small delay to the taxpayer also, because once the order is received to pay the tax in 60 days and file the Form 68 within the period of 1 month is being missed by many taxpayers. So a consequential amendment should be there. Secondly, for penalties, they have come out with amendment in section 275. We all know whenever we used to file appeals, we used to say that as per section 275, you keep the penalty proceedings in abeyance. There were two options. First, when there is no appeal, so in the financial year when the proceedings are completed, you have to pass the penalty order, and wherever there is appeal, once the appellate order is received, within 6 months department had to file in this penalty order, complete penalty proceedings. Now this was not being followed. There were the department bandwidth was not able to pass the penalty order, so they have made a uniform thing that within the 6 months from the end of quarter in which the order is received or the proceedings are completed, now you have to pass the penalty order. So they have brought a bit of uniformity in these penalty proceedings as to help the department in streamlining this kind of penalty orders. So this is a provision which has clarified things.
Okay. So Pankaj bhai, I was just watching this on the calculation of time from end of month or end of quarter. They made a lot of amendments in search proceedings also and other places
No,
also.
prior to this,
End of month से 12 महीना calculate करना.
Chairman
Yes,
sir,
Pramod bhai. Yeah.
one point just to supplement what Pankaj Bhai said.
Hmm.
Now in 275 they have brought one more clarity.
Hmm.
That is your appeal, your penalty would not be imposable if you have gone even for an appeal and with the IT-80. Earlier it was up to
CIT
CIT-80. Now
Yes.
IT-80 they have brought a clarity that if you are under appeal with IT-80 under section 253, then also
It does not get time bar, so you can keep it in abeyance.
yes,
That's an
they
idea.
cannot impose.
No, yeah,
Cannot
I
make, you cannannot impose.
Yeah.
So that clarity
Very
which
nice.
is good.
So I was just trying to tell us that time limits from end of month everywhere they have changed end of quarter. It's like assessment because the multiple they were facing when I was reading search amendment in 158 BB, they have said order should be passed from 12 months from end of the financial year, end of the month in which last authorization. So now they made end of quarter because the different assessee may have a different month and they were finding it difficult. So a lot of places they made it end of quarter instead of end of month for calculating 12 months, 6 months, 9 months, whatever it is. I could see that. One important prosecution, why I am happy because that was also again represented by Institute last year also, wherein they extended a date of time that when I am filing my own return and I am showing I delayed it, suo moto, why it should be a prosecution. That is why it was amended last year, and now they have included TCS also. I am very happy on that. Coming to you said that we should represent on something which I missed it. Sorry, I'm just missing it.
See,
Uh,
Form 68, you don't give much time to file Form 68, 1 month. Now they
Sorry,
have given department 3 months time to pass an order in consequence to my application to Form 68. But
immunity. Yeah, sorry. So I'll just clarify on that. We have already represented and we had asked more time rather than 30 days for filing and immunity applications. We had also said what is happening is Pankaj bhai, practically we get representation from our membership at large also. That when the computation if income is drawn, you will have a lot of rectifications appearing because tax is not properly calculated by assessing officer and 30 days never it is getting rectified. So I am not able to pay tax and actually apply under 270AA. So we had in fact asked in the pre-budget also that this 30 days should also 30 or 60 or 90. We had asked for 90 in fact, and it should start from the date when the rectified order comes into place. That we had asked, but unfortunately, as I said, some of the suggestions have been accepted. We'll again continue to ask in post budget, definitely.
very aptly said, Piyush Bhai. This time, I have seen around 70 to 80 assessment orders wherein they have not given the credit of TDS,
Yes.
which was claimed by me in my return of income. But while generating my notice of demand in ITNS, they have not given credit of tax TDS, which was deducted, or even in some cases self-assessment tax, and raised a huge demand. So in possibly 70 to 80 cases, we have gone for rectification. We have filed a rectification application, so Form 68 could not be filed. So this is also very important that it appears some kind of technical error on the part of department that assessments are being done, but tax credit is not granted in ITNS and notice of demand. So
Correct.
this issue, this year specifically, this issue has come to my notice.
Very correct. So before I go to Pramodji for charitable trust amendment, there's a small amendment as far as carry forward of losses is concerned in case of amalgamation. I would request Chitlis sir if we can throw light. There is some changes been did wherein 8 years carry forward period was available. I could renew it by doing some amalgamation, and I think so they want to plug this loophole. What is that actually, Chitlis sir?
Piyush bhai, if you take one some small amendment also on penalty, not very important, but I would like to tell for the benefit of our
Yes, please, please.
that at present some of the orders are passed by the Joint Commission of Income Tax or
Correct.
Income Tax. The orders under Section 271C, 271D, CA, etc., etc. But now they have amended that these will be passed by the assessing officer only.
Assessing officer.
But any approval, if needed, as per the provisions of Section 274, subsection 2, that will be taken, but will be passed by the assessing officer only.
Agreed.
For
Yeah.
the benefit of the audience. Just to
Yes, because the assessment order was been passed for non-compliance of 269 assessed by AO, whereas
yeah,
the imposition of penalty was by joint commissioner. So
joint
now the imposition authority has been given to AO,
yeah.
but with the approval of joint commissioner. So everywhere now beyond a particular limit of 10,000, 20,000,
Yeah, yeah, very small
have
limit. So
approvals.
approval will be needed in almost in every case, but just to supplement Pankaj bhai only. You know? Thank you.
Thank you very much, Satish bhai, for bringing this. It's a very important provision because actually, generally, whenever the penal provisions, we generally represent that you should actually go to higher authorities. This is a classic example where you have actually brought it to a lower authority for imposition. Because when you are actually imposing a penalty, it is expected the higher the authority, higher the wisdom would be there. But this is the only reverse provision which I have been taught of. Thank you very much for bringing it up. Chidle sir, sorry, we were on carry forward of
Yeah,
losses.
only one more ground will come in appeal for that. See, generally what happens whenever a permission or the authorization is required, at times it is seen that on say 22nd of say any
Application of
month they
mine.
make application and 23rd they receive the permission. So this one more point may come in for appeal that whether the bind is
Mine
applied
is
or not
applied
as
or
a
not. Correct.
authority.
Yes, sir. Chidle sir, one. Carry forward
So
losses we were saying.
one can look at it positively also.
Hmm.
As far as this amalgamation is concerned, generally it is seen that if the company is not doing well, if an entity is not doing well, and it is struggling to meet the two ends, at times they resort the process of amalgamation, in which the profit-making organization or the entity takes over the not so profit-making or loss-making. Of course, there are other situations as well. Loss is not the only criteria for entering into amalgamation, but by and large, it is seen that yes, where the loss-making entity is there and they are not able to run the business profitable entities take over them. So, what happens? The provision at present says that the law is contained in Section 72A for industrial companies, for partnerships turning into LLP, proprietorships turning into LLP, or company turning into partnerships coming into turning into company, LLP going to company, proprietorship going to company, or company going to LLP. In those cases of either amalgamation or reorganization, whenever there is carried forward loss or unabsorbed depreciation available with the amalgamating entity, in that case it shall be carried forward for 8 years from the year of amalgamation or year of reorganization. That has been the provision. Now, what has been observed by the memorandum, that whenever the loss is coming to an end, supposing there is seventh year and losses are mounting, in order to get lease of life of another 8 years, people are resorting to this tool of amalgamation. And in order to set at rest this particular loophole, as they are saying, that you are getting this further lease of life of 8 years from the year of reorganization or amalgamation. Now it provides that come what may, year of amalgamation will remain standalone if the loss, supposing A and B are the company, and loss of a company and unabsorbed depreciation is getting over to the merged company, then whatever years were remaining in the hands of the merged entity or the former entity, for those years the later entity would carry it forward. So supposing for 6 years the loss has already been, 6 years have been consumed by A Limited and it gets merged with B Limited. In that case, B Limited would be entitled to carry it for another 2 years. because A Limited would have carried it forward for 8 years. So this change they have brought about. As far as Section 72AA is concerned, it specifically relates to banking industry. Similar provisions. Only one would appreciate that as far as the entity which is getting merged may be a loss-making entity, it received some value considering the availability of this particular capital of, or as we say, loss. So if the loss is 1 crore rupees, that means that is a cash of 30 lakh rupees. So based on that, maybe consideration also was being received by the erstwhile entity which were getting merged. Now that incentive will not be there. So what will happen to those entities where the loss is getting allowed? So one cannot always see that okay, this was a tool which was being used. Now you have various other alternatives like maybe you have created insolvency and bankruptcy. So rather than going for insolvency and bankruptcy, if one tries to capitalize on the asset of this loss, and if the loss is 10 crores, assuming that that is asset of 3 crore rupees and you distribute say part of it with the erstwhile owners, maybe all the creditors, all the other lenders, they would securely get paid by the amalgamated entity. So this particular aspect also needs to be considered. It is not necessarily always the tax planning. But then come what may, the law which has been proposed is like this. Thank you.
Thank
Sir,
you.
sir, what about unopposed depreciation?
Yes, as far as loss is concerned, what they say is that loss will be available for carry forward to the extent it is available in the hands of amalgamating company or erstwhile company. As far as depreciation is concerned, as you are aware, it is carried forward under Chapter 4B, where business income is there under subsection 2 of Section 32. The depreciation is carried on and carried forward, and this unabsorbed depreciation is carried forward without any time limit. So maybe the same benefit will continue in the hands of
So same
subsequent
predecessor companies also allowed, so successor is also
successor is
allowed.
also allowed the same result.
So thank you very much. I have a lot of questions also for the panelists. I'll take up a questions in last 15 minutes. I have 5 minutes. Before we go to the questions which have been raised by the members on all the fronts, last request to Pramod bhai, if you can just throw some light on charitable trust. After 2021, this has been very tedious, and
The provisions are more uncharitable, so that they are being said.
are more uncharitable. If you can throw what are the amendments, what are the benefits, if anything has been received by such charitable organizations? Please.
Thank you, Chairman, sir. In fact, yes, they have been trying to improve upon the charities in synchronization among 10, 23, C, 4, 5, 6, 6, and all those, and 11, 12. So, last year they did it merged together, and this year we know that when they said that now the charities would be getting exemption under Section 12A for 5 years, and every post 5 years they have to prior to 6 months prior to the end of the 5 years they have to apply to renew. Now for the small charities, now they have brought an amendment under Section 12AB, where they said that if then application is made, trust is registered under Section 12A 1AC 125. There, if there total income is for the last 2 years is not exceeding 5 crore rupees in each of the years, then their validity of the exemption would be not 5 years, but it would be extended to 10 years. Now, few points out here to be noted. First, if I go to Section A 1AC, we have got not 1, 2, 3, 4, double I, triple I normally we say 1 to 5, we have got 1 to 6. So this extension is only for 1 to 5, not the sixth one. So for the sixth one, when you apply for the first time, you will be getting only for 3 years or 5 years, and then later on you will get for 10 years if your total income doesn't exceed 5 crore rupees. Secondly, if I talk about, there is a question whether this 5 crore would include the corpus donation. Now, suppose I have got my gross receipts of 6 crores, my total income is of 6 crores, out of which 2 crore is my corpus donation, which is exempt under Section 11(1)(d). So, whether I would be allowed to go for an extension, I will be allowed extension of 10 years or 5 years. The answer is No, it would be not allowed because there's 5 crore which I have to consider. I have to consider before taking into exemption section 11 and 12. So I have to take care. Now this for small charities, small charities we say because they have brought in that limit of 5 crores now. So we have got an extension from say it would be applicable for 10 years. So after 10 years, before the end of the 10 years, they have to 6 months they have to apply for the renewal. What about ATG? Does this small charities also have that exemption for 5 to 10 years? The answer is no. It is still 5 years for ATG. So one has to take care for ATG they have to go every 5 years for the renewal, and for 12 years they will have 10 years. Another amendment which they have made is because if I talk about section 12AB, they say that in certain cases, if there is a specified violation, the commissioner exemption can cancel the registration of the trust under section 12A. Now, specified violations contains various clauses. One of that said that the application, if it is referred to under section 1AC, is not complete or it contains false or incorrect information. Now, they have omitted the word, deleted the word is not complete. So, earlier, if the application was not complete, still the commissioner had the power to cancel the registration. But now they said that if it is not complete, then the registration would not be cancelled. But if it contains false or incorrect information, the commissioner exemption can still cancel the registration. Now the question arises: the application is to be made online. Will an application be accepted if it is incomplete? Now suppose the assessee has wrongly put a clause 12A 1AC 1 2 3 4 5 6. He put instead of 6 he put 3 or 4. So whether that is not complete or incorrect. So incorrect still remains. So again, the issues could be there. Issues could be there. Another important, very important element. Actually, we actually forgot that there is a person who is a specified person under section 13(3), where if any benefit is given to such persons, then to that portion of the benefits given, the exemption is not allowed, which contains the author, the founder, the trustees of the trust, their relatives, their concerns in which the concern in which they have sufficient interest. Another clause had that a person who has made substantial contribution in any time in the life of the trust aggregating to 50,000 rupees or more. So that person, their relative, and the concerns in which those persons were having substantial interest, they were the persons who are the persons. If any benefit is given to them, then that portion the income would be not exempt. Now it is very tough. 50,000 rupees is very less, and throughout the life of that trust, suppose there is an education institute or say a religious trust, which is donations are given every now and often. So 50,000 calculation is very tough. So now those limits have been increased. The limit is now in that particular relevant year 1 lakh rupees, and throughout the life of that trust or institution 10 lakh rupees. Secondly, the relatives of such person which were earlier covered are not covered. The concerns in which these persons are having substantial interest but which were earlier covered are not covered. So these limits have been rationalized, and we know that we are to the auditor has to report under section 10 and under the form 10BB and 10B of all these persons, and it is very tough for even the trust to maintain those 50,000 in aggregate throughout its life. So now I hope they will be taking care of this.
We
So
covered in our guidance note last year.
yeah,
We collect- So what do you mean by management? We tried to narrow down the definition of the management. We had a great discussion in council also that how you should cover it in guidance note. Just
so,
taking
so
an example. Yeah.
these amendments are welcome. Pankaj,
One more issue emerges, Pramod Bhai here. Uh, they have made amendment for 12A, but not ATG, as you said. But practically now every trust wants CSR donation, and for CSR, though ATG is not relevant because nobody goes for ATG donation under new regime. So ATG has become redundant, but ATG is relevant for CSR we may represent that for CSR, 12A and a complete charitable trust should be enough. We don't need 80G specifically also. So
So we
this
have
can be
to,
recommended.
and Pankaj Bhai very, very rightly said, and that has to be represented to the Ministry of Corporate Affairs to make an amendment in the rules out there because that
Because
requirement is there.
otherwise, nobody needs 80G now.
No,
Correct.
there are firms or LLPs who are still not under new regime. There is no regime specific for them, so they can go and donate.
Correct. So, of course, yes, please, sir.
No,
Chandra, sir.
not on this one. If you're on this, we can talk. Otherwise, on this amalgamation, I would like to put for panel's discussion to three issues.
I'll come to.
Yeah.
I'll just finish charitable trust,
Yes.
Chandra sir. Obviously, because there were questions also, I thought I'll just raise beforehand also. All the institutions, organizations which are registered today, will they get time up to 10 years now? I was registered 2 years before. Would I have to apply at end of third year, or I will have to apply at end of seventh year? If I completed 2 years or 3 years today, just what would
Now
be
this is a very very peculiar point. By now, the issues all those now last year if we see by the Finance Number 2 Act 2024 they extended it. They allowed the commissioner to provide for condonation if there is a delay in filing. Now many of the registrations are getting over. They require the renewal by the end of 31st March 2025, and the SSCs, the trust have not applied yet. And this new provision is applicable with effect from 1st April 2025. So if I say 2025, then as per law it has been extended. So if my exemption is pending and it is expiring after 1st April 2025, then I feel that I should get automatic. And I'm hoping that they would provide something in the rules or the forms where they can provide the
maybe
same.
through circular?
But now, though all those whose exemption is expiring as on 31st March 25, they should apply for the contention and apply for the exemption as of now. Otherwise, they are thinking that their exemption has been extended. I feel as of now, nothing unless some clarification
So
comes.
there's no clarity on it. Yes, Shakti, you want to say something?
Chairman sir, what I want to just say in this subject that when we read the amendment, provided that where an application is made under subsection 1 first to 5, so application made word is there, sir. So I think this tenure will be allowed only when new applications will be made, not
Okay.
to the existing trusts. Existing trusts will have to go for renewal within the period of 5 years, whatever the laws are there.
Okay. So provision says when the application is made, and that whatever applications made after 1st April 25, after Finance Act comes into the force, only 10 years would be there. Sir,
Here I'll request Chairman sir that appropriate
we'll make a
representation
we'll
be
make
made.
a. Sir, I'll just for benefit of the panel and the members, my para 1.12 of the comprehensive review, which is appearing on website of DTC, this was a suggestion which was again given by us.
Great.
In fact, we had said this was an alternate that 10 years. We had said you remove the registration requirement, make it live. My accounts, when we went to CBDT, we said my accounts are audited. 10B, 10BB is quite extensive. Now, what do you want? What your commissioner will check after 5 years when I'm giving so much details in 10B, 10BB? Please rely upon my audited statements. But I'm happy. At least they have moved from 5 to 10 years. When 10 years would be closed, we'll again try to represent and try to remove it. That's what I can hope for. Or income tax will make something come to it. Before I go to the questions from members, Chitra sir wanted to put some poisons. So, Chitra sir.
Just now we discussed about this 72A and 72AA changes, wherein the amalgamated company will get lease of life for loss, which was remaining pending in the hands of the amalgamated company or the predecessor company. Now that leads us to three issues. So I'll first throw open those three issues, then maybe one by one we can discuss. Issue number one is, see, A Limited has been amalgamated with B Limited 4 years ago, and B Limited has loss of 2 lakh rupees. A Limited has got a loss of 2 lakh rupees. That B Limited's losses maybe 6 years ago the B Limited has met with loss for 6 years, and that their loss is 6 years old. And then going forward on amalgamation, B Limited got lease of life for 8 years from the date of amalgamation, even for B Limited's loss. And now after 1st April, it is getting amalgamated with C limited. So how the period should be calculated as far as C limited is concerned, that is one issue. Secondly,
सर एक एक करके आंसर कर लेते हैं, याद ही कहाँ रहेगा.
okay, so first let us consider one aspect that it says that this particular lease of life limitation to thereof will come to any such scheme of amalgamation is brought into force on or after 1st April 2025. So the issue is I applied for this scheme of amalgamation with this effect from 1st February 2025 and it got approved from 1st May 2025.
Chitra sir, in my view,
Yes.
it is said when it is effective on or after 1st April 25. Now, in any amalgamation or merger, there are two dates: appointed date and effective date. Now, nowadays, if you see the new orders, the effective date is appointed date. Nowadays, if you see the people are applying very, very
Yes.
wisely. So, effective date is the date on which you get the NCLT order and that is filed with the registrar and that form is approved. On the date of approval of the form is the effective date. So, as on that date, if it is post 1st April 25, so the predecessor loss company, the remaining years.
So what it says that the amalgamations come into force. So it will
It
come
comes
into
into
force
force.
with retrospective effect.
No,
from,
sir, no, sir, no, sir.
So
This
this
is coming.
Issue would remain.
No, it is effective date. Comes on force. There under the Companies Act clearly given. Appointed date is different. Effective date is different.
I think so. What Chindesari was saying, like if there is amalgamation from A to B and B to C, what should be the period? If you actually interpret and with the objective is ultimately when was the loss incurred, you calculate 8 years from that. If loss was incurred by A, you calculate from A's 8 years. If it was incurred by B, though B is already a resulting entity of A plus B, then and B incurs further loss, you further calculate 8 years. That's what would be the objective. It seems that, and that's why it is.
If that amalgamation infected prior to 1st 25, that would crystallize that year.
You're right.
So from that 8 years, so when the B is carried forward, in my view.
You're right.
Tell-
So yes,
so
sir.
this issue also may need.
These issues require a lot of considerations on amalgamation. So I'll just go to the question of the members.
No,
because-
one more issue.
Yes, please. Chitta.
See, 4 years ago, A Limited got amalgamated, B and C got amalgamated in A Limited, and B and C both have losses of 3 crore rupees. During the passage of 4 years, 3 crore rupees loss has been amalgamated, but for B, supposing the life is 3 years, for C, the life is 2 years. So which loss should be considered as having been set off? In equal proportion, FIFO basis.
FIFO basis. I would say FIFO basis. Case to case. So
that also may need clarification.
you're right, sir. Now, sir, I'll come to there are questions from certain members. I've tried to, my officers tried to compile it and make it shorter because there are many questions. I'll first come directly to, there's a question on updated return first. So, I'll go to updated return was covered by Pramod Bhai. Whether update return under 139(8)(a) will be available prospectively or retrospectively. मतलब जिसकी टाइम चली गई उसको भी 4 साल मिलेंगे क्या? I think so. That's a very simple.
It is retrospective. It is a procedural thing. So 1st April 25, you can file 4 years, the prior 4 years.
That
The right is vested in him on 1st April.
Yeah. One question was on NRI.
Sir, I'll come to NRI. To Satish ji, 87A rebate is for resident individual. You mentioned it very clearly, I think so. But is it applicable to resident and not ordinarily resident? RNOR? You are mute. आप म्यूट पे सर.
Yes, sir. I'm now on. And to me, sir, since it is applicable and very clear words are there, resident and individual, so R and OR is not covered here, sir.
कोई व्यूज आपके प्रमोद जी?
Concur with this view, sir.
प्रमोद जी, हमारे पास एक कोई यूएई से मेंबर का मैसेज है कि सर एनआरआई को क्या दिया? आप सब पूरी बात तो कर ली, एनआरआई के लिए कुछ है क्या बजट में?
जितना हिंदुस्तान में कमाएंगे उसी का
Market,
बेनिफिट
Indian market is given to them.
very important. They won't be having that benefit of, as rightly said by Satish bhai, or right now their exempt income is 4 lakhs. It is not 12 lakhs. है ना? But they would get the benefit of the slab rates, no doubt about that. But no 87A. And Again, just think about the rental income, that TDS limit of 6 lakhs, that is not available to them. That is not available to them. Their deduction is under section 195. So under 195, the normal rate of tax that would be there, the 30%, whatever it may be, plus surcharge cess, that is deductible, because to the non-residents 195 is applicable. That's why the question which has been coming since last year, when for the long-term capital gains the tax rate was reduced from 20% to 12.5%. That under 195 for the capital gain on the immovable property, what rate is applicable? It is clear that 12.5%. Whatever is the rate applicable, you have to deduct that. So again, here one not these benefits of TDS and other things. India's income, non-residents, whatever taxes payable in India, they will have to pay. So they won't be getting anything special.
So whatever are the slab rates that are available to NRI, there is no specific
Only
per se for NRI
Only
something.
this 44 BBA which they have.
That's for a particular business entities providing
That-
services to a
yes,
particular
yes,
nature
yes.
of transactions.
Otherwise-
Otherwise, nothing very specific. And sir, NRIs के लिए तो ऐसे ही ठीक है. Sir, for Chitle sir, a very peculiar question here. Rent 50,000 per month के लिए. If I rent is 45,000 for first 4 months, so I think so 1,80,000 हो गया. And thereafter 52,000. Thereafter 52,000. Should TDS be made on 50 for the fifth month or on aggregate of 2,32,000?
See, generally we have seen that the levy of TDS is on annual receipts or annual payments. But in this case, because they have specifically stated 50,000 rupees per month, till the time the rent doesn't qualify that per month criteria, to my mind, it will not get applicable. So only when it exceeds 50,000, for those months, it would be applicable.
I'm sure whole panel is on.
100% agreed.
There's no dispute on this. Of course, a lot of people are asking on what on 194T partners के लिए कुछ करे सर वो हम करेंगे. There is always a issue on this. Will represent on 194T. Sir, again coming to Gupta if short-term gain is below 4 lakhs in new regime and no other income, is it taxable? I think so. That's clear. Anyways, Satish ji,
Yes, sir.
खाली मेरे पास शॉर्ट टर्म कैपिटल गेन इनकम है 4 लाख के नीचे की.
Not taxable, sir.
अब 4 लाख तक की तो बेनिफिट मिलेगी ही.
Yes, मिलेगी, sir. It will be available.
Yes, I agree. Now, of course, there is again 87A relief available or not if salary interest is rupees 11 lakhs. Tax under new regime is rupees 50,000 and short term capital gain is rupees 2 lakhs. So 11 lakhs is my normal income, 2 lakhs is my special income. Tax rate is 40,000. What will be my relief under 87A? So I have 11 lakhs regular income, 2 lakhs short term capital gain. I am exceeding gross total income is 13 lakhs. What would be my relief on 87A?
Available on the short-term capital gain part.
Which will not be available on STG. So
No.
50,000 is my tax liability on 11 lakhs, right?
Yes.
So I'll get rebate to the extent of 50,000. I'll not pay anything.
Whatever, yes.
और 2 लाख के ऊपर 20% अगर टैक्स रेट एप्लीकेबल है शॉर्ट टर्म का,
That will be payable.
I think so. It's very clear to the members who have asked this. Similar, of course, same question. I think so. That is already covered in this. Can we use condonation of delay under 119, Pramodji, when there is an option to file updated return? Does this updated return restrict the right of PCIT to grant condonation?
No, 119 is basically where you had refund and you could not file. Updated return, you cannot have refund. So for refund, there is still an option of 119 to be, you can still go there.
Regarding application of 5 crores and trust, registration of 5 years, 10 years, people are asking whether I should apply for renewal before 31st March 25. I think Prabhuji has said very clearly, Satish ji has also said very clearly. So, of course, I am not taking much questions because it's 5:30. We have tried at our direct tax committee programs to be well on time always. And of course, we will keep on discussing. But any members whosoever have any questions, please do write to dtc@ici.in. We'll try to answer that. Thank you very much for all your presence. For the benefit of panelists, we had 3,100 plus viewers today and 4,000. My staff office is saying 4,000. That speaks about the volume of the panelists who are speaking. And I'm very happy because Two are the sitting Central Council members, two are the new Central Council members who would be joining. Now Central Council is completely
You are
with direct tax
Council member, right?
experts.
We will be center.
We will be continuing
So,
also.
so I am sure for the members, any queries on direct tax, you have now a lot of experts in the council itself who would be answering your questions, your queries. Please do keep on writing. I would like to thank each of the panelists, starting from C.V. Chitle sir, who is senior most Central Council member, a senior most tax practitioner, expert in it. Thank you, sir. Thank you for your time and giving your efforts, answering the questions. Thank you very much, Pramod ji, again a tax expert. Thank you, Gupta ji, who is from Jaipur. We had a panel from Pune, Chitre sir, Delhi, Pramod ji, myself from Mumbai, Satish Gupta ji from Jaipur, and Pankaj Shah from Indore. So I've tried to cover. I did got somebody from South, but my vice chairman was supposed to join Kota Srinivas. He is not available currently. Otherwise, we would have from all the regions of our India as far as the institute is concerned. Thank you very much, Satish ji, for giving your time and covering in very detail the personal taxation which impacts everyone. Thank you very much, Pankaj bhai, for joining, covering startups, penalties and prosecution proceedings and all other matters and answering to questions too very much. So with this, my last thanks and very important thanks to my team, Direct Tax Committee team, my secretariat starting from Priya ma'am, Rudrakshi who are sitting in this room. Priya ji, if you can just join over here because I think so. I believe this would be my last seminar. Ya bajo aa jaiye, please. So I would like to thank you. We have been appealed to Rudrakshi. Please come. Uh, we have been appealed to do a lot of activities this year, which I briefed in the initial period also. So I would thank her. Without the efforts of Priyaji, Rudakshi and her team, this would have not been possible. I am sure, as it is said, the chairman, vice chairman, committee members will change, but direct tax committee will remain in the safest hands because of this particular thing. So thank you very much once again, and good evening, good night to all of you. Thank you.
Good night, sir. Thank you.
Or
Thank you.
Pankaj joined, the viewership increased.
Pankaj Shah.
Thank you, sir. Thank you.
Thanks a lot. Thank you, Pankaj bhai.
Thank you. Recording stop.